And this opens up a new gateway for 90 million Americans to gain exposure to crypto through their employer-sponsored savings. This is a 9 trillion market, and even a tiny sliver of it going towards Bitcoin and crypto will have outsized effects.
Morning, everyone, and welcome back to Bitcoin.com's The Weekly, where we recap the biggest stories in the Bitcoin and cryptoverse. My name is Graham Stone, and I'm joined by David Sencil. And despite it being the middle of August, when historically there's been a dearth of Bitcoin and crypto news, we've got another busy week here, so let's get into it.
Dearth.
David, kick us off. Yes, excellent usage of the worst word, dearth.
Good vocabulary. I like it. Right. So some of the biggest news last week was Donald Trump's executive orders. First up, let's talk about the 401k executive order. Last Thursday, August 7th, the White House issued an executive order titled Democratizing Access to Alternative Assets for 401k Investors. For the first time, U.S. retirement savers will be permitted to allocate a portion of their 401k accounts to certain alternative assets. This includes private equity, real estate, gold, and digital assets such as cryptocurrencies. Very, very big news, and probably going to have, I think, short-term effects. I mean, it's going to start in the short term, but have long-term effects on the kind of price appreciation of Bitcoin and crypto. So the EO gives regulators 180 days to figure it out, meaning that likely by early next year, you'll actually be able to do this. And this opens up a new gateway for 90 million Americans to gain exposure to crypto through their employer-sponsored savings. This is a 9 trillion market, Graham. And even a tiny sliver of it going towards Bitcoin and crypto will have outsized effects.
Yeah. And I would say that people who are just entering the workforce, people who are just starting to contribute to their 401ks are going to be the most likely to allocate a portion of their 401k to Bitcoin and crypto. The old folks, maybe not so much. But yeah, as you mentioned, it's going to take 180 days, probably at least, before you'll actually be able to do this. But this is big news.
Yeah, I mean, on this, I wrote about this in my newsletter, but earlier in last week, Jordy Alexander had a great post about how much money it takes to feel like you're making it, like you're wealthy, like you're secure, and how high it is, and how it's actually increasing really quickly and maybe even accelerating. And the second that I heard this EO news, it made me think of that post. And I think this will have a psychological effect also, in addition to an actual effect on flows, because people who are younger or mid-career, I think they'll see this as kind of like a tacit sign by the government saying like, hey, we know money's being debased and you need alternative ways to preserve your wealth. And this is outside of crypto. The fact that they're allowing these savings vehicles, right, these long-term savings vehicles to include alternative assets like gold and real estate, I think is going to have this kind of long-term effect of maybe making people think more about this kind of debasement. I don't know, maybe I'm overreaching there, but that's the first thing I thought of when I saw this.
Yeah, I mean, you can tie this into the thing with in the U.S. Giving everyone who is born like $1,000 of S&P 500, right? Wasn't that didn't that come out a few months ago as some kind of executive order?
It's been talked about for a while too. Yeah.
To me, those things are related. It's like, okay, we're not going to give you $1,000 because why would you want that? That'll be worth nothing when you're older. But if we'll give you $1,000 of the S&P 500, which at least that's going to hopefully outpace the debasement of the US dollar.
I agree. And I don't know, like, so I wrote this in the newsletter. I don't know if this is going to cause people to think like this more, or if this executive order is in response to people already feeling thinking like this. I don't think it really matters either way. The net effect is the same. I think there is this, like, especially going forward, there's just going to be this like ambient feeling that to feel like even you're treading water, let alone kind of moving up, is going to take alternative investing strategies than what was done before.
There was another executive order issued last week, and this one relates to the choke point 2.0, the debanking issue. So it's called the Guaranteeing Fair Banking for All Americans executive order. And it was framed by Trump as a personal matter, basically, because Trump posits that him and his family were debanked for political reasons, which is probably true. And anyway, that's how it was framed. But it does outline a few important things. One is it targets politicized and unlawful debanking, and it specifically removes reputational risk from regulatory guidance. So banks should no longer be allowed to not give you a bank account because it might hurt their reputation. And it also puts forth a path for remedying past instances, including of debanking, including potentially levying fines against banks who debanked people for like political reasons. Then it also implements restating of affected clients. So if you were debanked, according to this EO, the bank has to like give you an opportunity to be banked again. As with the other EO, regulators have like 180 days to sort of get their cards in order here and figure out what to do. And so that means the agencies will be conducting reviews, potentially amending guidance. And the real thing that actually needs to happen here, if we're going to eventually ever end this debanking, and so we had Operation Choke Point 1.0, then 2.0, which was kind of mostly against crypto. There's going to be a third choke point at some point unless actual legislation comes in place, is my opinion.
Well, just to that point, Graham, I've heard choke point 3.0 might already be underway now. I am skeptical of this whole EO. I kind of rolled my eyes when I saw this. To me, it's like putting your thumb in a leak in a dam. What's that famous story? But anyway, it's the yeah. So fine, they close these loopholes. But when the government wants to do some nefarious stuff, they're gonna find a way. This is I don't know. This just doesn't seem like this just seems kind of like
It's
pandering
petty.
and just like well, not even petty, but like, look, we're fixing things, and fine,
Yeah.
I guess so. You're fixing this, but there's not going to be any way to stop the government from finding another little avenue to do another choke point. So I don't know. Skeptical.
Yeah. With the financial system having so much insight into everyone's life, the potential for abuse is just so high, and it's unlikely that this is going to stop unless actual decentralized money becomes the norm, which you know one can dream.
Yeah, I mean that, or you have like a high trust society where citizens become part of the government and they don't want to screw over other parts of their other citizens. That could also be a path, but maybe that's behind us.
All right, so let's move on to some bullish Bitcoin news.
All right, yeah. So Bitcoin kind of didn't do that much last week, but there was bullish news coming out of Bitcoin land nonetheless. I think one of the most kind of interesting stories, or at least funny, was another American institution changing its tune on Bitcoin. This time we go to higher education, to the hallowed halls of Harvard, which spent $116 million of their endowment fund to buy iShares Bitcoin Trust ETF. And so this makes the world's richest university firmly in the Bitcoin camp. There were a lot of dunking on Harvard for this move because famously over the years, people who are associated with Harvard, not necessarily representing Harvard as a whole, but associated with Harvard, for example, this Harvard economist predicting that Bitcoin was more likely to reach $100 than $100,000. And then here you have Harvard buying Bitcoin, I think it was at like $116,000. So it's kind of funny, and it's always a fun time to make jokes at these smarty pants institutions like this.
Yeah. Harvard puts $116 million into Bitcoin. Pretty bullish.
After people associated with Harvard being very critical of it over the past decade plus.
So another bullish point here is on stablecoins. They are booming. The entire sector just hit a new record, $270 billion of stablecoins in circulation. Why is this important? I mean, historically, stablecoin inflows are a pretty good indicator of new money entering the crypto market. So when you see stablecoin inflows go up, that means you're probably going to see shortly thereafter the prices of the marquee crypto assets also going up. Besides that, of course, with more stablecoins in circulation, it's just a further indicator that stablecoins are a thing. They have product market fit in the crypto space. People are using them. There was a stat I think a few months ago, which the volume of stable coins, the way they're traded, is in the same ballpark as like Visa, the entire Visa network. Now, it's not payments, right? That we're talking about here. It's just trading volume, and a lot of trading volume goes through stablecoins, and it's comparable to the entire Visa network.
The only thing I would add here is the inverse of what of the first point you said is also true. I usually look at stablecoin outflows as a very, very important indicator that you might be reaching a top in markets. And so I think this maybe complicates the calculus on that, because if institutions are now getting into the stablecoin game, they're not necessarily going to be buying crypto assets. And so you could very easily have a situation where this is no longer a reliable indicator that things are turning over, as in stable coin inflows could be increasing, and they could just be increasing over the next couple years no matter what, even if crypto markets are tanking. And so that's something that I'm now having to adjust in metrics that I'm looking at. And yeah, for those of you out there who also look at it, you need to be aware of that too.
All right, let's move on to another piece of regulatory news, which is coming. This one comes out of the SEC relating to liquid staking.
Just to step back for a second, we're just getting like relentless waves of good news from the US government. I mean, it's just, I'm kind of desensitized to it now. I don't know about you, Graham, but what we're about to talk about 2 years ago would be just in and of itself very big news, you know? And now it's just, what, is this the third story we've talked about today for last week?
Yeah.
It's just kind of mind boggling. You think about it, like, I don't know. Anyway, so here's some more kind of earth-shattering good news for crypto markets. The SEC's Division of Corporation Finance issued a staff statement last week, August 5th. Now, a staff statement is not legally enforceable. It's guidance, okay? But market participants pay close attention to these staff statements because they often give insight into how the SEC will likely review filings or enforce rules in the future. They're kind of a way for the SEC to preview to businesses how they will act. And in that way, it's very, very important. This staff statement said if strict factual conditions are met, liquid staking activities, as defined, do not constitute the offer or sale of securities. This is to say that it's likely going to set the stage for Ethereum and other proof of stake crypto assets with ETFs to offer staking in the future. More guidance and rules will probably be forthcoming, but again, this is really kind of, I would say, the first step or the first indication of where we will likely be in, I don't know, 3 to 6 months. And that's very, very bullish for Ethereum in particular over Bitcoin, right? Really, really quite big news. And yeah, it's going to have, I think it'll have major, major effects going forward.
Yeah. And speaking of Ethereum, the world's second largest crypto broke 4K for the first time since December of last year, peaking at $4,315. And this is partly, I'm sure, on the back of this regulatory staff statement that you just mentioned, but there are many other reasons for Ethereum's rise, not least of which is the Ethereum corporate treasury Meta, spearheaded by now Ethereum bull Tom Lee and the Bitmine, what's it called? Stock, Ethereum corporate treasury vehicle. Ethereum bros are reveling in their new moment.
I would just add that on our other podcast called Token Narratives, I think not to pat ourselves on the back, but these token narratives, you really do see these kind of narratives kind of come out, and they're almost like issued out by groups of people. I'm not going to say cabals like it's organized, but with Ethereum, you've seen just this kind of avalanche of good news and positive news from institutions, for example, right? Like I've just
Yeah,
on my
exactly.
feed
So
all the time.
exactly. Here's an example. Standard Charter puts out a statement saying that Ethereum treasury companies are a better buy than US spot Ether ETFs. So
Right.
the institutions are saying, hey, yeah, don't just buy Ethereum, buy these companies because
Yeah.
you'll do better.
And again, maybe this is just me being paranoid. It's not that what the story is talking about is wrong. It's also just that they're choosing what to talk about, right? Like 6 months ago, they weren't really maybe releasing that much Ethereum news or Ethereum related content. But now suddenly I feel like BlackRock and Standard Chartered and other major institutions are coincidentally talking a lot about Ethereum analysis and Ethereum news. And lo and behold, the price is going up. So I don't know. But anyway, it feels like Ethereum has this momentum right now. I have been abused by Ethereum so much. I can't, I just can't, I'm not going to buy into it. I'm not going to, not going to jump into Ethereum again, Graham. I don't know about you, but I'm happy to see it go up because I think it'll have more immediate and stronger effects on the rest of the market than Bitcoin going up.
All right, let's move on to our last story for the week, which is XRP supposedly finally again ending their legal woes.
Yeah,
Or
this is
are we
funny.
sure about this time? Because it seems
No,
like every other week there's a story that XRP's legal woes are finally over, but then I hear another one a few weeks later, and it's basically I don't know what's going on here.
I write a weekly recap called The Weekly for news.bitcoin.com. And I can't tell you how many times in the past year, at least since Trump got elected, the number of stories that have basically said the Ripple versus SEC case or various cases and whatever is over. And now Ripple is free to do whatever, XYZ. And so here we have another example of this. The Ripple versus SEC case officially over. Appeals are dropped. XRP is ready to rip. Let me just read to you what I wrote in this weekly from a couple days ago. How many times have I been promised that Ripple's SEC case is finally over? 11th time's the charm? Whatever the reality is, I think I was talking to you about this before we went on air. I think everybody kind of knows that the Ripple versus SEC litigation is done. Whether this is the actual finally it is done point, I think all the institutions, all the major players, everyone involved, probably in government and Ripple side, it's done. And it's just formalities now till we get to the point where it is actually officially 100% signed and sealed, stamped, done. And I think you can probably see institutions and other players front running this knowledge. Now, whether this is actually done, we don't know. But again, there are a lot of stories in the news that kind of, I think, support my idea. So, for example, Japan's SBI is laying the groundwork for a gold and crypto ETF. They wouldn't be doing this if they thought there was still any chance that the SEC was going after them illegally. And BlackRock's XRP ETF has been receiving a lot of like chatter and rumors and amendments to the SEC filings. And so all of this kind of points to the fact that people are fairly confident that Ripple is in the clear. And
Yeah,
if it's not right
the
now,
Ripple
it will be.
the poly market on whether Ripple gets an XRP spiked to 90% certain that it's going to happen. Basically, right on the back of this most recent "the lawsuit is over" news. It does seem likely that Ripple is actually in the clear. There's a lot of institutional support for the XRP token, so yeah, it's going to pump to what was it? What was the target? $10,000
$10,000. That's the new
per
one.
Ripple. So
$10,000 per.
that's 40 times the global GDP or something.
There was a great post, not last week, but I think 2 weeks ago. Fairly big CT account posted a screenshot from his dad's friend, and his dad's friend was like, "Hi, I know you're a trader and you dabble in crypto, and I've heard that XRP is going to go to $10,000 now that the SEC is kind of gotten out of the way. And so I was wondering how much money you think I should put in it. If I put in $10,000, that'll give me, like 10 million by the time XRP goes to 10,000. Or do you think that's too conservative and I should put in more?" And this guy posted this, and it's a real post, right? His guy's getting asked a real question, and the person on the other end has $10,000+ of liquid capital to plow into XRP with a belief that it could go to $10,000 per token. That's wild, man.
Well, it's cheap, right? Ripple's only like $3, so and meanwhile Bitcoin's 115,000 or whatever. So it's
Exactly.
a deal.
So
You're getting a deal on the Ripple.
if Bitcoin can go to $100,000 plus, why can't Ripple? Right?
Of course, yeah. You don't need to look at anything like the circulating supply. It's not. It's irrelevant. All right, David.
Wait, can we
Thanks
check?
for the recap this week.
Are there any Ripple
Yeah.
people in the chat? Oh, I guess it's a little delayed. I want to see if they're upset. All right, sorry.
All right, David. Thanks for the recap this week. Thanks everyone for listening. That's it for Bitcoin.com's The Weekly for this week. Have a great week. Goodbye.